Hi, Ben McAdam here from ProfitsCollective.com, and in this video I want to show you how to always have money for your tax bills. When I'm on a call with a potential client, there's about a 30% chance that this issue comes up. It's super common and really a big problem for a lot of people. Most people who've been in business have probably experienced this. Their first tax bill sometimes is they get the bill and they go, how on earth am I going to pay this? Where am I going to get the money from? And in a lot of countries, you can just get a payment arrangement with the tax authority. They'll let you pay it off over time. But sometimes there's interest, there's penalties, and sometimes they want you to pay future tax obligations, which might be only 3 months away. They want you to pay those on time. So you're not really solving the problem by being able to take on a payment arrangement. And it's like really, for a lot of people, they're afraid of the tax department. And so if you can solve this problem, then it makes everything a little bit easier. So let me show you a quick system that's been around in various forms for thousands of years, really. Let's get into it. There's two things we need to talk about. We need to talk about the ideal that we're aiming for, and then how do we get there. So the ideal that we're aiming for is money comes in to your business. We'll call this bank. Money comes into your business bank account, and then every day or once a week, you split some of it off into a savings account. Hooray, Ben, you've told me to save. Great. But the reason why this works is it's really simple. People can go into the bank, they can see how much has been deposited since the last time they did this, and then they can put a percentage of it away to savings, and then the rest just kind of stays in the bank account. So that percentage is the bit that makes this thing simple. So there's no like willpower, like, oh, how much can I afford? Oh no, I'll pay a little less this week because I want to buy this shiny object. None of that. The percentage is just like, this is what I do this all the time, and whatever's left over, that's just what I have to use. So the percentage, I can't give you what the percentage is. You'll have to go to your tax accountant for a percentage. But when you do, here's the simple way to say it, because I know some of you have tax accountants that bill by the hour still. So go to your tax accountant and say something like, hi, I want a percentage that I can apply to the income that comes into my business. That percentage needs to be enough that's like my tax bill for the year. So that's the background for the tax accountant. And you can say to them, can you look at my tax bill for last year and divide it by my income for last year, the income on my profit and loss or income statement, divide it by that, and can you tell me what that percentage is? And can you just check for me that I can use that percentage again this year, given that I'm probably going to earn whatever the amount is. So estimating that amount that you're going to earn, you could just take whatever you've earned so far for the year and then extrapolate that out of like, if it's been 5 months and you've earned $50,000, well, then you can probably guess that you're going to be at least $120,000 when the year's done. So you give that fee to the tax accountant as well, just in case you're about to go up a tax bracket. And that piece there is why we need your tax accountant to do this and why you can't just do this. Because if you look at last year, you could look at your tax bill, you could look at your income, you could come up with that percentage yourself. But we want your tax accountant to do it because this year you're not going to earn the same amount. No business earns the same thing year in and year out. Well, there may be a few. So we need to get the tax accountant to give you that figure. And if you need to get down those phrases I used again, just rewatch the video. So your tax accountant's going to give it to you. And the thing is, the tax accountant will need to take into account income taxes. There may be state and federal income taxes, particularly for those of you in the US. Income taxes, but also the sales taxes, GST, VAT, whatever your equivalent there is, that needs to be taken into account as well. We want all of anything that's considered a tax bill, not just your annual income tax return, any kind of tax bill we want put into this savings account. Oh, that was a terrible error. When you do this, it means that you'll always have the money there. You'll always also have a buffer that you can potentially tap into in an emergency, and I stress emergency there, and wanting something expensive is not an emergency. All right, so that's the ideal. Let's move on now and talk a bit about how we get there. Because for most people, if I said, take a big chunk out of the money that goes into your bank account and put it away, they would just go, oh, there'd be panic. And then potentially it would be a problem. They've committed to expenses and debts potentially that they need to pay. So getting there, we want to start with small percentage. And over time, we'll gradually increase it. So starting with something is important because it gets the habit going. Then the next thing, the other idea you can do, this is not really my favorite, is you can do amounts whenever you can afford them. Or to make it a bit more of a habit and to keep reminding you that you can't just spend everything that's in your bank account, do it once a week. Look at how much money you have, what bills you have coming up, and put some tax savings money aside. I definitely suggest that you get that percentage. Because at the very least, you could get a smaller amount than that percentage and you'll be better off than nothing. So definitely priority is using that percentage system. And that way it keeps it simple and you'll always make sure that you have money for your tax bills. This, by the way, works for other infrequent bills that you have, although for other bills, usually you can estimate what they'll be. Normally they're like a fixed dollar figure, whereas tax rates are percentages in most countries. So you can also do it for other infrequent bills. For that, you might instead come up with a weekly fixed dollar amount that you transfer into a savings account, just to make sure that you have it. Another thing that people sometimes do is they will sometimes pay the money straight to their tax department. They'll pay a fixed amount every week, and then when the tax bill comes, it's not as big an amount of money. That's another way. Personally, I don't like letting the tax office have more of my money, more than they're entitled to it. I would rather have it in my business, at the very least, earning interest for me. So that's another option as well. So there you have it, a simple system to make sure that you always have money for tax. I hope that was helpful. If it was helpful, leave a like or a comment. If you're in the position where you actually have a tax bill and you need to find some money, or you would like to do this percentage thing but don't know how you can do it, then I suggest go to profitscollective.com .com/QPH for Quick Profit Hunt. It's a way to find some extra money and ongoing for your business as well. So I hope that's helpful. Let me know in the comments or hit the like button if that was helpful, and I will see you on the next video.